Hello viewers, welcome to my channel. I'm Hasham. Already 6 problems I've completed on holding companies apart from 10 short problems on holding companies. So presently the subject going on is advanced corporate accounting. In this subject the topic going on is holding companies. I have uploaded the video on introduction to this topic, holding companies, how to make consolidated balance sheet, how to find out the goodwill, capital reserve, minority interest, capital profit, revenue profit. All these things I have explained in the introduction part, and starting videos, short questions on how to compute all these things. So if you have watched those videos, definitely you can be able to understand these main problems easily. Otherwise, if you have not watched that problems, if you join in between, you may not be able to fully understand. So my suggestion, if you want the complete grasp on the subject, watch the earlier videos. Go to the playlist of my channel, select the subject advanced corporate accounting, select the topic holding companies, watch the earlier videos, then only you can be able to understand. If you join in between, you will not be able to understand. Similarly, if you want the complete grasp on the subject, watch the video in continuity, first, second, third, like that. If you join in between, you may not be able to understand. If you skip in between, you cannot be able to get the complete command. So follow my instructions and enlighten your knowledge. Now, before starting the 7th problem, I expect my viewers to have a printout of the problems which are given in the link under my description. So take a printout, keep it ready before start watching the problems video. Now, 7th problem I am reading out. Prepare a consolidated balance sheet from the following information. Balance sheet is given as on 31st December 1989. H Limited, S Limited, Holding Company Limited and Subsidiary Company. Share capital, shares of rupees 10 each, fully paid 20,000 and S Limited 12,000. Already I explained you the share capital of holding company will come same as it is in the consolidated balance sheet, whereas the share capital of subsidiary company will not be taken in the consolidated balance sheet. Then general reserve is given only in holding company, so this general reserve directly will come in consolidated balance sheet. And creditors, simply we have to add up both the creditors, take accounts payable in the consolidated balance sheet. Profit and loss account, H Limited and S Limited. The H Limited profit and loss account same to same as it is, it will appear in consolidated. So H Limited share capital, reserves and profit and loss account exactly same, no adjustment, it will directly be taken in consolidated. Whereas S Limited profit and loss account 1,800 is given, we have to see whether this is the profit of the current year or past year. Now S sundry assets, S assets का मतलब sundry assets. तो sundry assets of H Limited 22,000, S Limited 16,000. Add up both the assets, sundry assets, and take it under tangible assets in the consolidated balance sheet. Now, 800 shares in S Limited, 8,000 rupees. Investments. These are the investments made by H Limited in S Limited. So how many shares H Limited has purchased? 800 shares. How many shares are there in S Limited? See the balance sheet liability side. 12,000 is the share capital and each share face value is 10. So 12,000 divided by 10, 1200. So totally 1200 shares are there in S Limited. Out of 1200, 800 shares are purchased by H Limited. Remaining 400 shares are held by outsider. So out of total 1200, totally 1200 shares, 800 shares are held by holding company, 400 shares are held by outsiders. Now shares are purchased by H Limited and S Limited on 30th June 1989. 30th June 1989, this is the date on which H Limited has purchased the shares in S Limited. Our balance sheet is given 31st December 1989. So how many months are post and pre-acquisition? 30th June means July, August, September, October, November, December. 6 months. So 6 months are post-acquisition period and 6 months are pre-acquisition period. Now On 1st January 1989, the balance sheet of S Limited showed a loss of 3,000 which was written off out of the profits earned during 1989. Last sentence. It is saying that at the beginning of the year, 1st January 1989, beginning of the year, there was a 3,000 rupees loss in the balance sheet of S Limited. The beginning of the year, 3,000 rupees loss. And end of the year, there is a profit of 1,800. That means after setting off of loss, beginning of the year 3,000 rupees loss. During the year some profit has been earned, and after earning the profit we have set off that 3,000 rupees loss, and end of the year we are having 1,800 rupees. So totally how much profit we have earned? 3,000 plus 1,800, 4,800 rupees profit earned during the year. Out of 4,800, 3,000 rupees loss at the beginning of the year was set off, and 4,800 minus 3,000, 1,800 is the still profit and loss account balance it is showing in the balance sheet. That is the new point in this problem. I told you in every problem almost 80 to 90% points are same. Only 10-20% points are different. So in this problem also, the new point is S Limited was having 3,000 rupees loss at the beginning of the year, and during the year some profit has been earned, and the lost 3,000 rupees was set off, and still we are having 1,800 rupees profit. So after setting off of 3,000 loss, we are having 1,800. So totally how much profit we have earned? 4,800 rupees profit we have earned during the year. That is the only new point. Remaining everything same. See here, first of all, you have to prepare a blank balance sheet according to the format Companies Act 2013. The consolidated balance sheet of H Limited and its subsidiary S Limited as on 31st December 1989. Equity and liabilities, shareholders fund, share capital, then reserves and surplus, note number 1, note number 2, minority interest, non-current liabilities. We have to calculate all these amounts in notes. First of all, you take all this blank balance sheet with note number. Then current liability, trade payable, note number 4. The total of liabilities. Then assets, non-current assets, tangible assets, intangible assets, non-current investments. Even if it is not there, for the sake of format, we are writing it down, put a dash. Current assets. In this problem, we are not given any current assets like inventory, account receivable, cash and cash equivalent, any other current asset. Nothing is given. But for the sake of formality, we are writing down all the items, put a dash. Because in our problem, we don't have. Now, after making this format, now we'll come to the working notes first. So what is the working note first? Total number of shares in S Limited are 1,200. You can see the balance sheet. S Limited share capital is 12,000 and the face value of each share is 10 rupees. So 12,000 divided by 10, 1,200 shares. Total number of shares. How many shares are held by H Limited? 800 given in the balance sheet asset side. It is given H Limited holds 800 shares in S Limited. 800. Shares, number of shares held by outsider, 400. Because out of 1,200, 800 shares are held by H Limited, remaining 400 shares are held by outsiders, minority interest. Then share of H Limited. So out of 1,200 shares, 800 shares are held by H Limited. So 800 by 1,200, 8 by 12. 4 2s are 8, 4 3s are 12, 2 by 3. Similarly, share of outsider, minority interest, 400 shares are held, 400 by 1,200, 4 by 12, 1 by 3. Simply you have to remember 2/3 is the share of H Limited in S Limited and 1/3 is the share of outsider in S Limited. First working note completed. Second working note. Now this is very important. Loss of S Limited on 1st January 1989, 3,000. Beginning of the year, there was a loss of 3,000 rupees in S Limited. And profit on 31st December 1989 after setting off of loss is equal to 800. यानी 3,000 रुपये जो लॉस है उसको सेट ऑफ कर दिए, करने के बाद अभी 1,800 रुपीज बचे हुए हैं। तो हाउ मच प्रॉफिट माइट हैव बीन अर्न्ड? 3,000 प्लस 800, 3,000 प्लस 1,800, 3,000 प्लस 1,800, 4,800 is the profit earned during the year 1989. पूरे साल का प्रॉफिट 4,800 है। But during the year, 6 months are pre-acquisition, 6 months are post-acquisition, because date of acquisition is 30th June 1989. On 30th June 1989, H Limited has purchased the shares in S Limited. So 6 months before, 6 months after. So pre-acquisition profit 4,800 into 1 by 2, 2,400. Post-acquisition profit 4,800 1 by 2, 2,400. For the whole year, 12 months profit 4,800. First 6 months pre-acquisition, next 6 months post-acquisition. The post-acquisition profit is a revenue profit. This 2,400 post-acquisition, after acquisition, this is revenue profit. And the profit before acquisition, 2,400 pre-acquisition, this is capital profit. Already in the beginning also I told you, the profit of subsidiary before acquisition is a capital profit. After acquisition is a revenue profit. So before acquisition, we are having 3,000 rupees loss and 2,400 rupees profit. So we have loss as well as profit before acquisition. So we'll set off. Capital loss from 1st January 1989, 3,000. 3,000 rupees is the capital loss at the beginning of the year. And during the first 6 months, how much profit has been earned? 2,400. So minus capital profit up to 30th June 1989. So before acquisition of shares, the capital profit is 2,400. So 3,000 loss, 2,400 profit. Set off कर लो, 3,000 minus 2,400, net capital loss is 600. Now this 600 rupees will be shared by H Limited and minority interest. 2/3 will go to H Limited, 1/3 will go to minority interest. So 2/3 share of capital loss of H Limited, 600 into 2 by 3, 400. Share of capital loss of minority interest, 600 into 1 by 3, 200. So 400 is the share of capital loss of H Limited, 200 is the capital loss, share of capital loss of minority interest. Now we'll calculate revenue profit. Already we have calculated. Revenue profit means post-acquisition profit. After acquisition जो profit earn करेंगे वो revenue profit. Already post-acquisition profit we have calculated 2,400. Now share of H Limited. This revenue profit will be given to H Limited and also to minority. So this 2,400 into 2 by 3, 1,600 is the share of revenue profit which goes to H Limited. Similarly, 2,400 into 1 by 3, 800 rupees is the share of revenue profit of minority interest. We have divided. Now calculation of goodwill or capital reserve as usual. All these calculations we require mainly for calculating this. Without calculating all this capital loss and revenue loss, all these things, we cannot be able to get goodwill or capital reserve. The cost of investment of H Limited 8,000. Balance sheet it is given. Asset side, investment made by H Limited in S Limited is 8,000. Cost of investment. From this we deduct capital, paid up share capital and capital profit. But we don't have capital profit, we have capital loss. Here we have capital loss. Share of capital loss of H Limited 400. अगर capital profit रहता था तो paid up share capital plus capital profit दोनों को add करके cost of investment में से minus है. But we don't have capital profit, we have capital loss. So paid up share capital 800 shares. H Limited holds 800 shares. So 800 into 10, 8,000. Minus capital loss. How much share of capital loss of H Limited? 400. So 8,000 minus 400, 7,600. Now deduct. 8,000 minus 7,600, 400 rupees positive. If you get positive value, it is goodwill. If it is negative, it will be capital reserve. But here positive value. So we got the goodwill. This goodwill will be taken under intangible asset in the balance sheet. Now minority interest, last working note, minority interest. In minority interest, we'll take paid up shares, paid up value of shares. How many shares are held by outsider? 400. 400 shares. Face value 10 rupees. So 400 into 10, 4,000. To this we add share of revenue profit. How much is the share of revenue profit of minority interest? You can see revenue profit, share of minority interest is 800. Add up 800. So 4,000 plus 800, 4,800. From this we subtract capital loss, share of capital loss of minority interest. Here it is. Share of capital loss of minority interest, 200. So deduct 200 rupees, 4,600. This is the minority interest, and it will be taken on the liability side of consolidated balance sheet. Or the complete heart of the problem lies with this working notes. If you remember, if you understand this working notes, the problem is nothing. All these making the consolidated balance sheet, writing down all the notes forming part of financial statement, it's very easy. The only difficult point is you have to remember, you have to understand the working notes. That is more important. Now, notes forming part of financial statements. How many notes we have? 1, 2, 3, 4, 5, 6. These 6 notes we have to show it here. These are called notes forming part of financial statements. First note, share capital. Whose share capital? Share capital of H Limited, not S Limited. So H Limited, how much is the share capital given in the problem? 20,000. 2,000 shares of rupees 10 each. 2,000 equity shares of 10 each, 20,000. So we have taken 20,000 here. That's it. Second, reserves and surplus. Under reserves and surplus, we should take the reserves and P&L account of H Limited as it is. So reserves, general reserve of H Limited and P&L account of H Limited as it is. Whatever is given in the problem, same thing we'll take. Now we'll take the revenue profit earned from S Limited. What is the share of revenue profit earned from S Limited? 1,600. This is the share of H Limited in revenue profit, 1,600. The share in revenue profit from S Limited, 1,600. Take the total 9,600, take it here. Then third, minority interest. Already we have calculated minority interest here, 4,600. 4,600. Trade payable. Trade payable means creditors. We add up the creditors of H Limited and S Limited. Creditors of H Limited, S Limited add up 4,200. Liability side completed, 38,400. Now we'll come to the asset side, tangible. Fifth note, tangible fixed assets. So tangible fixed assets means sundry assets of H Limited, S Limited add up both 38,000. 38,000 we have taken. Intangible asset, goodwill. Now goodwill was not given in the balance sheet. We have calculated the goodwill in working notes. Here you can see goodwill 400 rupees we have calculated. That goodwill 400 rupees we have taken. Take it here 400. That's all. 38,400 balance sheet tallied. So this is the end of problem number 7. Come on, now we'll start the next problem. Problem number 8. Prepare consolidated balance sheet from the following. Liability side B Limited and C Limited. So two companies are there. B Limited, C Limited. So liability side share capital, shares of rupees 10 each, 5 lakh in B Limited, 3 lakh in C Limited. Then creditors, bills payable. So these creditors and bills payable will be taken under trade payables on the liability side. Now asset side, land and building. We simply club both land and building of B Limited and C Limited and take it in the consolidated balance sheet. Then investments. Investments in C Limited. That means B Limited is making the investment in C Limited. So B Limited is the holding company, C Limited is the subsidiary company. So how much investment it is making? Investment in C Limited 1,80,000 amount, 60% shares. That means B Limited is holding 60% of shares of C Limited. Remaining 40% shares are held by outsiders, minority interest. And debtors, bills receivable. Debtors and bills receivable, we will combine it together and make it under trade receivable. Then last one, cash and cash equivalent. So one point is there in this problem, we are not given any reserves or P&L account. On the liability side, there is no reserves, no P&L account. So there is no question of capital profit or revenue profit. No question of capital profit and revenue profit. That point we have saved. But what is the new point? See the adjustment. Additional information. Amount of rupees 20,000 is included in the debtors of B Limited, which is due from C Limited. This is the new point. First time we are coming across. The debtors of B Limited includes 20,000 rupees due from C Limited. That means in the list of debtors of B Limited includes C Limited. That means amount is due from C Limited. B Limited को पैसे आने का है किसके पास से? C Limited के पास से. और C Limited की बैलेंस शीट में creditors में, in creditors the name of B Limited is included. For example, my company is B Limited, your company is C Limited. So your company is subsidiary company, my company holding company. So during the year I sold goods to you on credit. On credit I sold goods to you. B Limited has sold the goods to C Limited. You have not paid the amount. You are my debtor. So your name C Limited is in the list of my debtors. And you are keeping creditors list. In creditors list you are writing my name. That means you are going to pay me and I have to get receive from you. So you are my debtor and I am the creditor. From your point of view, I am the creditor. From my point of view, you are my debtor. How much? 20,000. This is called intercompany debt. The amount is due from one company to another company. When we are merging both the companies, we should eliminate this common transaction. This common transaction which is there. In my books, you are my debtor. In your books, I am your creditor. So in your creditors list, my name is there. And my debtors list, your name is there. So what we'll do is, we deduct 20,000 from the debtors and creditors. So in consolidated balance sheet, trade payables. In trade payables, we take creditors. Add up both the creditors of B Limited and C Limited. Both creditors we add up. From that we deduct intercompany debt 20,000. First effect. Second effect. In trade receivable, in asset side trade receivable. In trade receivable, we add up bills receivable of B Limited, debtors of B Limited, debtors of C Limited. Debtors of B Limited, debtors of C Limited. From the total, we deduct 20,000 rupees. That means 20,000 rupees will be deducted from total debtors and 20,000 rupees will be deducted from total creditors. That is the effect. Very simple. Next, one more point is there. Out of the bills possessed by C Limited, bills worth rupees 15,000 are bills accepted by B Limited. One more intercompany transaction. First intercompany transaction, debtors, creditors. We deduct 20,000 rupees from debtors, we deduct 20,000 from creditors. That is intercompany. One more transaction, intercompany transaction. The bills receivable of C Limited. The bills receivable of C Limited includes 15,000 rupees bill which are accepted by B Limited. Which are accepted by B Limited. When the B Limited has accepted, it will write it in bills payable. It will write the amount in bills payable. And C Limited, bills receivable. So what we'll do? This 15,000 rupees we deduct from bills receivable and also bills payable. 15,000 rupees are common transaction. It is the bill accepted. The The party who accepts the bill, it will be in bills payable. The party who draws the bill, it is bills receivable. So C Limited is holding the bill. That means C Limited has drawn the bill. On whom it has drawn the bill? On B Limited. B Limited has accepted the bill. So B Limited, bills payable, and C Limited, bills receivable. So from bills receivable and bills payable, we deduct 15,000 rupees. These are the two transactions. These are the two additional information. Previous problem, this point was not there. So in this problem, the only new point is this: intercompany transaction or intercompany debt. Remaining all the points are very, very simple. The consolidated balance sheet of B Limited and its subsidiary C Limited as on date is not given, put a dash. Now equity and liability, shareholders fund, share capital number 1, reserves and surplus number 2, minority interest 3. Non-current liabilities are not there, just leave it. Then current liability, trade payable number 4, total. Then asset side, non-current assets, fixed assets, tangible, intangible, non-current investments are not there. Then current assets, inventories, trade receivable, cash and cash equivalent, other current assets. Right? Now all these notes we will provide. First of all, we will calculate the working note. Share of B Limited. How much share B Limited is holding in C Limited? 60%. B Limited purchased 60% of shares of C Limited, whereas 40% shares of C Limited are held by outsiders. Next, calculation of goodwill or capital reserve. See here, in this problem, the positive point is the reserves and P&L account are not at all given. So there is no question of capital profit. So before calculating goodwill or capital reserve, always we used to calculate the capital profit. But here in our problem, we don't have capital profit. So directly we can calculate goodwill or capital reserve. Investment of B Limited. In the balance sheet which is given in the problem, you can see how much is the investment made by B Limited in C Limited. 1,80,000. It is given in the balance sheet. Now let's paid up value of shares. How much percentage B Limited is holding in C Limited? 60%. What is the share capital of C Limited? 3 lakh given in the problem. 3 lakh rupees the share capital. So 60% of 3 lakh, 1,80,000. So 1,80,000 minus 1,80,000, nil. So no goodwill, no capital reserve. First point. Second, minority interest. We don't have any reserves, we don't have any profit, we don't have any loss, nothing. So simply we'll take paid up value of shares. The total share capital of C Limited is 3 lakh and 40% is held by minority interest, outsider. So 40% of 3 lakh, 1,20,000 is the minority interest. Now I have already explained you intercompany transaction. Here for your benefit, I am writing it down. The debtors of B Limited includes 20,000 due from C Limited. So now we are combining both B Limited and C Limited, consolidated balance sheet of B Limited and C Limited. When we combine both the companies, intercompany transaction should be eliminated. 20,000 rupees of debtors includes B Limited, which is due from C Limited. It is called intercompany transaction or intercompany debt. What it should be done? It should be deducted from debtors as well as creditors. That's it. From debtors and from creditors, we deduct 20,000. That's all. Now, bills payable. One more adjustment is given in the problem. Bills receivable of C Limited includes 15,000, which was accepted by B Limited. That means the bills receivable C Limited is having, and these bills receivable of C Limited includes 15,000 bills accepted by B Limited. Accepted by B Limited. So in B Limited, it is bills payable. In C Limited, it is bills receivable. So we deduct 15,000 rupees from bills receivable as well as bills payable. It will be deducted from bills receivable as well as bills payable. That's it. Now, notes. Working notes completed. Now we are coming to the notes forming part of financial statements. First, share capital. Directly in the balance sheet, whatever share capital is given in B Limited, holding company, That will take as it is. So 50,000 shares of 10 each, 5 lakh rupees given in the problem, same thing we have taken. Now my reserves and surplus, there is no reserves and surplus in the problem. You can see the balance sheet, there are no reserves and surplus, nil. Minority interest, just now we have calculated 1,20,000 is the minority interest. Then trade payable. Trade payable includes creditors and bills payable. Now you concentrate on this point because this is the only new point in this problem. Earlier problems we have not come across this point. Now trade payable includes creditors and bills payable. We add up. First of all, we will take the creditors. In the balance sheet you can see the creditors of B Limited 2 lakh, C Limited 1 lakh. So total creditors are 3 lakh. From total creditors we deduct intercompany debt. Intercompany debts are 20,000. First point here. The intercompany debt is 20,000. So 3 lakh minus 20,000, 2 lakh 80,000 is the creditors. Now it also includes bills payable because trade payable includes creditors and bills payable. So now in the balance sheet you can see, in the problem you can see balance sheet, trade payables of B Limited 30,000, C Limited 25,000. Take the total, 55,000 is the total bills payable. From this we deduct the common bill. Well, how much is the common bill? 15,000. 15,000 is the common bill which is drawn by C Limited and accepted by B Limited. That 15,000 we deduct. So 55,000 minus 15,000, 40,000 is the bills payable. 40,000 bills payable. Creditors 2,80,000. Bills payable 40,000. Take the total, 3,20,000 is the trade payable. Now you can see here trade payable, fourth point, 3,20,000. So we have taken all the items on the liability side. So total of liability side 9,40,000. Now asset side, fifth and sixth. Now you can see fifth, tangible fixed assets. Simply you have to add up the fixed assets of B Limited as well as C Limited. Take the total, 6 lakh rupees in the balance sheet. Now sixth point, trade receivable. We don't have any intangible asset. Goodwill we don't have. No goodwill at all. So trade receivable. Trade receivables are debtors. Debtors will take B Limited, C Limited given in the problem. In the problem you can see debtors are B Limited 1 lakh, C Limited 1,50,000, total 2,50,000 is the debtors. From the debtors we deduct intercompany debt. The intercompany debt is 20,000. This. The 20,000 we have deducted from creditors. Same 20,000 we have to deduct from debtors. So debtors may say 20,000 minus. So 250 minus 20, 230. Now bills receivable. See the problem in the balance sheet. Bills receivable is given B Limited 40,000, C Limited 60,000. Total bills receivable 1 lakh. From this 1 lakh, the common bill. The common bill means bill drawn by C Limited and accepted by B Limited. How much? 15,000. 15,000 is the common bill. This one. That will be deducted. 15. So 1 lakh minus 15,000, 85,000. Now you add up 2,30,000 plus 85,000. 3,15,000 is the account receivable. 3,15,000 is the trade receivable. Trade receivable. So you can take it here, trade receivable 3,15,000. Right? Now, cash and cash equivalent. This includes cash in hand. Cash in hand. B Limited 10,000, C Limited 15,000, total 25,000. So actually we'll take this 6th and 7th here. 6th and this is 7th. We don't have this intangible. That's it. Over. So this is the end of problem number 8. So totally 8 main problems we have completed on holding companies. Each problem, each point I have explained in detail. If you want the comment, watch this video not once, twice, thrice. Definitely you will get a good command, good grasp on this topic of holding companies. So if you are satisfied with my lecture, give a like to the video. Give your comments regarding these lectures. Share this channel in your groups, in your friend circle, so that more students can watch the videos and gain the knowledge. And lastly, don't forget to subscribe the channel. We'll continue the next problem in the next video.